All right, well, let's welcome in the management of RITES now. The company reported a weak set for the quarter. Revenues were down 7%. Margins came under some pressure. We have Rahul Mithal, Chairman and Managing Director at the company, now joining in to take some questions. Mr. Mithal, great to have you with us here. Thank you for your time. Prashant this side. So Q2 has been soft for the company, especially in the consulting and the turnkey projects business. What has led to the weak execution in the quarter, and are there any specific projects which contributed towards this, and how are they working out in Q3?
Morning. Yes, Q2 has been a tough quarter. Some of our projects, both in the consultancy and the turnkey, have got impacted across various geographies, as you would have seen in this quarter in many infrastructure projects. Moving forward, we have to consolidate. We would be consolidating as we have been doing sequentially in this FY, and focusing on faster execution in the two balanced quarters so that we continue consolidating our position as we move forward. The satisfactory, we've been satisfied, and satisfactory movement is the breakthrough which we are achieving in expanding our order book across segments. We maintained our track record of being a one order a day company in this quarter. We got orders of 90 plus orders of about 700 plus crores. In fact, the fresh orders that we received in this quarter was more than the entire H1 of last FY. So this trend, as we continue moving forward and consolidating our execution, we would see a sequential improvement.
No, sir, but I think we need some more understanding of why execution is not picking up, because it's not one segment which is hurting, right? Consultancy, in India is down, consultancy abroad is down, turnkey projects are down. And if I look at even H1, the overall H1 picture, consolidated revenue, then revenue is also lower. So what is this challenge that you're facing with execution? And I'm not talking order book right now. Let's talk execution in the second half. Do you see it improving? How will it improve? And what can we expect in terms of revenue? Will there be any growth this year?
For sure. As I said, most of our projects, whether in this particular quarter, across various geographies, we are executing consultancy and turnkey projects of more than 600 projects. So many of them were impacted, as you would have seen in this quarter, across many geographies due to a lot of factors like rains in certain areas, certain constraints in certain particular projects. So sequentially, yes, definitely I see an improvement in the execution, both our consultancy and turnkey sectors moving forward in Q3 and Q4.
What kind of revenue growth, if you're saying second half will see an improvement, on a full year basis, will the top line grow? And if yes, even a rough range would work, 5% growth, 10% growth, what can it be?
If you see H1 to H1, there's a hit of about 100 crores on revenue. And if you see moving forward, we would aim to grow sequentially to reach at least the levels of the previous FY on an FY basis. So that's the focus. The growth in Q3, Q4 would be aimed at reaching an overall revenue levels as close as possible to the previous FY.
Okay, so at least at a full year basis, hopefully you won't see a dip in the current financial year. Got that. And on margins, sir, again, just to complete the picture on the execution, and then we'll talk about the future opportunities. On margins, because of this weakness, I think the numbers have now dipped to about 20% for the first half. As execution picks up in the second half, what is a realistic margin band that you would want to operate at, which you think you'll end the year at?
You see, there is, as we have been seeing, there is a dramatic change in every quarter in terms of the orders that we are receiving vis-a-vis competitor versus nomination. So as you enter more and more in every quarter, and while still maintaining a one order a day track record, your margins definitely come under more stress. So the levels of PAT and EBITDA margins that we've seen in Q2, about 20-21% EBITDA margin and PAT margins about 15-16%, moving forward, the margins would remain more or less in this range.
This range being around? If you
As I
can
said,
give us the
EBITDA
number.
margins, which you saw in Q2 about 20-21%,
20%.
and PAT margins about 15-16%.
Okay, so the margin profile will be around the 20% mark. Then that you're saying. Okay, so that's the update on the execution. Now let's talk about this winning one order a day. I think the total order book as of now is around 6,600 odd crores, 6,580 thereabouts, right? So what is the projected win rate, and you're covered for how many quarters with this kind of order book?
You see, the current order book, as I said, has been growing. This quarter, we got about 700 crores plus ordered. And the way it is growing, and even in the first month of Q3, we've already got orders above about 650 odd crores in 1 month. So our focus is that we continue maintaining this trend. Currently, as you correctly said, about 6,580 crores is about visibility of roughly about 2.5 odd years on an average. So moving forward, while focusing, as I said, on increased execution also, we would continue to focus expanding our order book. So ideally, moving forward in few quarters, you would try to touch the, the target of about a 3-year visibility in terms of order book.
Okay. And when you say 3-year visibility, what number gives you 3-year visibility? How many crores?
So 6,580 crores, I said about 2.5 years. Increased execution, growth in revenue would roughly mean another growth of about 1,500 odd crores in order book.
Okay, all right, got that. So that would then cover you for 3 years. Thank you, Mr. Mithal, for joining in and explaining the business to us. And your investors will definitely hope that along with the order book, the execution keeps picking up as well, which is the promise for the second half from the company. That's RITES on the radar. Okay, the